In this video, we're looking at Adobe Stock, ticker ADBE. The goal of this video is to determine what kind of return an investor can expect if invested at the current price level. So first, we will look at some of the numbers of Adobe, how Adobe makes money, their main sources of revenue. We will look at some of the ratios, return on assets, return on invested capital, their current debt level. We will look at their current valuation. We will use free cash flow yield as a valuation metric. And then in the end, we will look at what kind of return we can expect from the stock. So we will make free cash flow projections for the next 2 years. So let's get started. First of all, if you have investment ideas or you want to make a deeper dive on super investors' portfolios, please write in the comments below. Okay, Adobe is a stock that is owned by Terry Smith. Around 3% of his portfolio is in Adobe. So we will look at some of the ratios that Terry Smith uses in his analysis. But first, let's look at some of the numbers of Adobe. Their current market cap is around 160 billion. For the last year, the price is down from close to 520 to close to 342 at the moment of running the video. If we look at their debt level, we can see that they have more cash than debt. So they have minus 1.5 billion of net debt. They are not paying a dividend, which is actually maybe a very positive thing. So they use free cash flow to grow. You also don't have to pay taxes on the dividend. So for growth companies like Adobe, this is actually a very positive thing. If we look at the return on assets and return on invested capital, which Terry Smith uses in his analysis, we can see that the business is highly effective. They have very high return on invested capital of close to 25% and return on assets of close to 17%. Okay, how Adobe makes money? If we look at the recent 10Q report, we can see that they have revenue of close to 4.5 billion, and they have two main segments: digital media, which includes Creative Cloud, which also includes products like Adobe Photoshop, Adobe Illustrator. I personally used them before. If you start using them, it's very unlikely that you will switch to other products. So this is the source of their moat. Their switching costs are extremely high. And this segment brought around 3.3 billion of revenue in the previous quarter. The growth rate in this segment is around 10%. The other segment, digital experience, which includes other services, brought around 1 billion in the previous quarter, and it grew around 14% year over year. If you look at the revenue by country, the most revenue comes from America segment, but the revenue is also diversified, so around 40% comes from other segments. But again, the most of the revenue comes from America segment. We also can see that they're buying back the shares. The average rate is around 1%. As Warren Buffett famously said, if they keep doing that, I will be the last shareholder. Okay, now let's look at their valuation. We do not want to overpay for the stock. We will use free cash flow yield as a valuation metric. A very similar metric is used by Terry Smith in his analysis. So this is the next 12-month free cash flow divided by current market cap. If you look at their chart of free cash flow yield for the last 3 years, we can see that currently it's around 5%, while the average is around 3.2%. So according to this metric, the stock offers more than 50% upside. So the stock is significantly undervalued according to this metric. And the fair value of the stock is around $540 per share. The upside is around 57% according to this metric. Okay, so Adobe has high return on invested capital, it's buying back the shares, it has high quality free cash flow. According to free cash flow yield metric, the stock seems to be undervalued. What kind of return we can expect from the stock? First, let's make free cash flow projections. So in 2 years, according to analysts, the free cash flow will be close to 9 billion. Right now, the free cash flow is around 7.6 billion. So this implies the growth rate of around 10.7%. If we also include 5 years before this date, the average growth rate was around 16%. So the growth rate is slowing down. So the growth rate of Adobe was much higher. And I believe this is one of the risks investing in Adobe. So if the growth rate is lower, the free cash flow multiple that it trades at may also be lower. As a result, the stock will trade lower. So this is one of the risks investing in growth companies. Okay, so we looked at free cash flow projections for the next 2 years. The average growth rate, as we saw, is around 10.7%. So let's calculate the total return an average investor could get if invested in Adobe. So currently free cash flow yield is around 5%. We add the shares buybacks, which are around 1%. We add margin expansion, which is around 0.5%. So if the business is getting more efficient, they have higher margins. As a result, they get more free cash flow. And as we saw, the free cash flow growth rate for the next 2 years is projected to be close to 10.7%, according to analysts. So the total return is around 17%. So 17% is the average return an investor could get investing in Adobe. Okay, Adobe has a wide moat. The source of their moat, their competitive advantage, I believe, are switching costs. So it's very hard to learn new products. That's why the switching costs are extremely high. Their business model is highly effective. They have high return on invested capital, high return on assets. Adobe is a stock that is owned by Terry Smith, so it's a very positive sign that super investors are buying or holding the same stock that we are researching. If we use free cash flow yield metric, the shares are currently undervalued, around 50% undervalued, and the average return an investor could get over the next 2 years is around 17%. So that includes 5% from free cash flow yield currently, 1% from shares buybacks, 0.5% from margin expansion, and 10% growth rate of free cash flow. So the average return an investor could get is around 17%. Also, if you want to know more about other stocks that were purchased by super investors, here's the video. If you are not subscribed to the channel, you can do this by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.